Hello there, everyone. Welcome to the Gold Market Mastery webinar, 7 p.m. webinar. We've already done a couple of webinars today already. Welcome to this one. I'm going to give it a minute or so just to give everyone an opportunity that wants to join it before we start talking about gold. If you are joining me today on Facebook and YouTube, you can drop some comments. Let me know where you're watching from. Let me know if you've watched a webinar here already or stream already today. Nice to see if you've got some new people in the house. Going to be talking all things gold. Hello from South Africa. Hello, welcome. Hi, Cody. Hope you're well. We're going to change this one up a little bit. I've been looking for some data today. I've got a little bit of COT data to talk about, got a little bit of seasonal data, a little bit of gold-silver ratio stuff going on as well. Just give it another minute or so, and then we'll get going. As we go along as well, guys, don't forget that you have a chance to win an ounce of gold. There's a banner that's running at the bottom of the stream. If you read that, it will give you the conditions for you to be able to enter to win that ounce of gold. So don't forget that. Also, if you are on YouTube, please subscribe to the channel. It really helps us to be able to put on more events like this. And if you do like the live events, I'm going to be doing another live event tomorrow around about NFP. So it's going to be around about 1:20 British Standard Time. Hello, Denise. Yeah, live, yeah. I'm a real person behind the screen. Yeah, we're going to talk about gold today. We're going to talk about, if you haven't been in the webinars already, I'm probably going to, or if you have been in the webinars already, I'm probably going to rehash a little bit of information that you may have already heard. We're just going to, again, break down those sort of technicals, see how prices performed over the day, because we're looking at some data in the afternoon webinar where we were talking about the unemployment claims in the US. I'm just looking above just at the Forex Factory calendar here, and I can see that the unemployment claims came in at 242. So that's quite a significant change. The forecast was 239, come out as 242. So going into non-farm payrolls tomorrow is going to be really interesting. Maybe that unemployment rate will increase as forecasts suggest. So that's going to be an interesting one to watch. Denise, NFP tomorrow. I'll set my alarm to be there. It's 5:30 a.m. my time. Wow. It will be replayed after if you do want to have a, if you don't want to get up too early, will be replayed after. Hi, Royston. That's okay. Again, sort of just rehashed what we already talked about. I'm going to change it up a little bit this evening just for those that have been in there. I can see there's a few people in here already that have joined me for the first sort of couple of webinars. So I do want to kind of give a little bit of different information each time so it's a bit fresh. So like I said, I'm going to talk about the COP reports, going to talk about some of the gold silver ratio, going to talk a little bit about seasonals as well, because gold is obviously in a really interesting place at the moment. And I think NFP is going to really be a strong catalyst to what could happen with the price of gold next. So maybe we'll even cover gold again tomorrow in the live session. So as always, if you have any questions, please let me know. Drop a comment in the comment section, and I'll try and get round to it, or I'll make a note of it to talk about it at the end of the stream. It's only going to be a short stream. It's going to be about 30 minutes or so, so I don't want to take up too much of your evening. But if you do have any questions after and you leave them on the live stream comments, I'll make sure to get back to you at some point. So I hope you don't miss out on sort of asking questions and things like that. But yeah, we're going to start off with some seasonal reports. Let's actually get some seasonal reports. Now, you're probably quite familiar with this seasonal heat map. Now, this is from a website called Markets Made Clear. Really, really good website. They actually do COP reports and things like that as well. And I really like this format of the currency seasonal reports. It's more of a heat map rather than sort of a big overall seasonal chart. I did try and find another type of seasonal chart, but there's not many seasonal charts out there for free, and I don't like to push you into things where you've got to pay for stuff, you know, if you don't need to. And this is free from Markets Made Clear, so if you do want to have that resource, then head over to them. I know the guy who runs it, and a really, really good guy. But the currency seasonal reports I've got here suggest that the price of gold does move lower through May. Let me just grab a little bit of a pencil here, and I'll try and highlight this to you because you might not be able to see it that well. Let me try and zoom in as well. Zoom in. Here we go. So you can see gold here. I'm just going to scroll up a little bit. I'm going to highlight this out. So if I just grab the box tool, hold shift to draw a square. Okay. I'm going to grab gold. Oh, that's an interesting square. Here's May. I'm going to highlight June as well. There we go. Through that area, just through there. Hopefully you can see that. I've drawn that as yellow, so that might be a little bit hard to see. Let me choose a different color there. There you go. Right, so I've highlighted May and June here, and you can see that on a seasonal perspective, it's not the worst performing month for gold, May, minus 0.98%. Usually March is one of the worst performing months, as well as September. So those are usually the worst performing months. You can see that because it's highlighted in red, and this is why I really like these seasonal heat maps, because it's very visual. However, it is down minus 0.98%. That could be down to the fact that the US dollar index usually performs quite well through May as well. You can also see that you've got things like stock markets that tend to perform poorly, and you have the VIX that is quite high as well, the volatility index. So you've got all that sort of information there from a seasonal perspective. You know, there is a usual saying, sell in May and go away. However, obviously other fundamentals are driving the markets at the moment, including the Federal Reserve's decision to hike interest rates with the potential to pause in the next meeting. Denise, as high as gold is, jewelry sales are way down. Yeah, and that could be down to sort of the cost of living, price of gold. You know, if it's more expensive to buy gold in and to make, then it's going to affect, or the costs are going to be passed down to the consumers, and that's never going to be good for people that are looking to buy jewelry. So yeah, inflation is going to affect everything as well, and then obviously you've got the Federal Reserve that are looking to try and play down that inflation rate. Although, like I said in the previous two webinars, the inflation rate in the US has come down significantly. So it's going to be interesting to see what the Federal Reserve do next. Obviously, they've all hinted that the next meeting could be to pause, or, you know, I think the market are probably going to more price in the fact that they are going to pause in the next meeting. So it's going to be super interesting what happens there. But from a seasonal point of view, gold technically is looking to be potentially bearish. This seasonal heat map takes in 20 years of data. So over the past 20 years, May has been a poor performing month. If we actually take a look at the chart and where we're at the moment, let me just clear this off. We can see that we're at a key area of resistance. Now, we've talked about the 2075 handle, those key major highs, those key range highs. And we're looking to see how price reacts to this area. Now, I'm on the fundamental side that the dollar is going to weaken. So I have a potential sort of bias for gold continuing to push to the upside. However, is it a sensible decision to start buying gold where price is at the moment? Probably not. From a personal point of view, you're at a previous structure high. So traders that are looking to get long here might struggle to get a decent position in. What I would prefer to see is price trade outside of the range and then look for a retest for a continuation of that move. There's something I want to point our attention to as well, which is some commitment of trader data. This is only basic data that I found, but again, it was free. So if you are looking for some free commitment of trader data, I mean, the commitment of trader reports are free anyway. So you can go direct to the Chicago Board of Exchange website and you can download the commitment of trader data for free. The only problem is it's a lot of data to download. So if you've not got the sort of storage space on your computer to do it, it's a very difficult thing to try and track and get into. But some websites do try and track it. This was one that I pulled from bar chart, and I'm looking at what you're looking at here. In the red is the commercials, in the green is the non-commercials, and the blue line is the non-reportables. Now, the important one for me to watch when I'm looking at this type of information is what are the commercials doing. The commercials are in the market for business purposes. So they're looking to potentially sort of hedge pricing and things like that. So treat it as if price is going down, the commercials are going to be buying more of it because they're doing it from a business standpoint. As price decreases, they will buy more of it. Okay, as price moves higher, they will sell more of it. Now, I want to draw your attention to what happened or where the contracts were the last time we saw price drop. So obviously the last time price kind of dropped was back at the range high. So this area here, okay, just to kind of draw your attention to it, is exactly the same as this area here. Okay, it's just that it's in a little bit of a different format. Okay, so if you are confused, it's just the same. Now you can see the high that formed back in there, which was that March 22. In a previous webinar, we highlighted the fact that that was after Russia invaded Ukraine. We had that spike up into that previous high. Let me just see if I can draw a line here. So like that. So that's that sort of range high we're talking about there. And look at the spike there, and then we're going to look at the contracts. Okay, so you can see if we look to the right hand side, we've got minus 300,000 contracts. So that basically means that commercials are heavily short at this point. The last time they were this aggressively short was in this area here through sort of late 2020, and that was this period sort of here. Okay, where price declined. Okay, and you can see as price declines, the commercials buy. Okay, so that's why you see that move through there. Again, as price declined, commercials were buying, and that's how you saw this little red line start to move up. Now, this is very basic data. Okay, there are other packages out there that give you a lot more data than this, that can refine it a little bit better. But what I'm trying to get at is the fact that look at where contracts are now. Okay, so where we were in that spike before, where price reversed quite significantly, look at the contracts. They're at minus 300,000. We're nowhere near that this time. Okay, so that tells me that the price of gold may not be at its peak yet. Okay, does that make sense? Let me know in the comment comment box if that makes sense. So if you haven't heard of Commitment of Traders report, it may not make sense straight away. What I would be looking for personally is for these contracts to be down here. Okay, if the contracts were at a similar level where they were before, where we had that strong rejection and we were at this peak here, makes sense, wouldn't it? It makes sense to say, okay, there's a potential for price to trade lower here because the commercials are selling heavily like they did in March 2022 because the price spiked higher. Okay, but they're not at that same level. They're not at that same level. So we need to consider what could potentially happen here. Okay, and to me, that is a potential for price to break higher. Okay, quite bullish on gold at the moment. Doesn't mean I'm going to be, personally a buyer right now, but it keeps me in that mindset of where's that potential bias? Is that bias short or is it long? And if it's long at the moment, I'm going to be looking for those technical areas to potentially buy from. Now, one of those technical areas that we spoke about this morning was some recent lows. So yeah, Denise, I will post the link. If you haven't got the link on me right now, so if these comments are still on the video on the live stream after, I will post the links tomorrow, if that's okay. Just give me a reminder on one of the videos if I don't do it, okay? But yeah, so you can see that we're in this range. Prices come to the highs of the range, looking to be a potential buyer. Now, there are a few opportunities I feel that could occur. Now, you can see I've marked out the 1950 handle. Those are the previous swing highs. Price broke through, retested them on the other side, and again, we rallied to the upside. So from a bigger picture perspective, there's a potential for price to maybe pull back down into that sort of 1950 handle and maybe then trade to the upside. Okay, from a shorter time frame point of view, we could potentially look at the most recently formed swing lows in here, and this derives from the dollar index. So if you were in the webinars this morning, you will hear me talk about the dollar index in depth. Okay, I'm not going to do that too much tonight, but I am going to again flick back over onto them and just show you where the US dollar index is, because what we showed this morning was the correlation between the two. So let me actually just bring in, where did I put that now? In the downloads, wasn't it? Was it this one? Yes, look, so there we go. Here, this is what we looked at this morning as well. So this is from tradesandeconomics.com. What you can get here. Now this is the dollar index versus the gold price. Okay. Now you can see how heavily correlated the price of gold and the US dollar index is. Now, some of you may go, well, yeah, duh, yeah, it is. But there are occasions where the correlation isn't there. So it's always good to check in with your correlations on a regular basis. And we can confidently say that the price of the dollar moving to the downside caused the price of gold to move higher. When dollar moved higher, gold moved lower. When dollar moved lower, gold moved higher again. Okay, and now we're in this kind of period where the US dollar is starting to range. Okay, so if I go into the dollar index here, we can see that sort of between the 102 handle, which is around about here, and that 101 or the 100 spot 75 handle, which is down through there, there's that slight trading range. And this is what I think needs to get broken in order for us to see any kind of significant move on gold forming. Okay, one thing we can look for, let's say NFP happens tomorrow, it's all bad news, it's all red, there's an opportunity there for the Federal Reserve to then pause in the next meeting, then the dollar could trade through into the low 101 lows there, retest it on the other side and trade lower. If that happens, then there is a good chance that the price of gold is going to break through those highs. And the next level on the US dollar index is the 99 handle. Okay, so that's what I'm going to be looking for if price does break through that 101. If the opposite happens, let's say price rallies and the dollar index comes up into these 102 highs, or even into the 103 resistance, we start to see a little bit of a rejection going on there, then the price of gold will most likely be back down towards these lows. So what is that area? That is an area of support. It's an area of support, because if I zoom in, you can see how buyers reacted when we were down in this level before. Okay, we had some strong sort of wicks coming down. Price has failed to break through this sort of 1975 handle, and we've seen price accelerate to the upside. Okay, so that's the one way we can expect price to come lower. It's almost this range here matches this range here on the US dollar index. Okay, so one or two things could potentially happen. Fundamentally, at the moment, the dollar is weak. Okay, we're kind of looking at that across the board. We've seen again today that the dollar came into the 101 handle. It bounced. Let me just go to the hourly time frame. It bounced. We then did get that news announcement, which was the unemployment claims. The dollar did spike higher after a little bit of a move to the downside, but again, sellers quickly come back into the market to drive prices lower again. So whenever we see this dollar rally at the moment, there's quick to be some selling going on the other side of it. So tomorrow is going to be a very, very interesting day. But one to watch is definitely this 101 from the dollar index side of things. If the 101 breaks, I expect gold to break a little bit higher here. Also, if we go and have a little look at sort of the 4-hour time frame here, you know, when price comes into these key areas of structure, I like to look at sort of trading patterns. So for instance, when price comes into a level of resistance, I like to look for a double top pattern with the potential to move lower. If you watched my pound yen analysis this week on our YouTube channel, it was a very similar thing. Price came up into the key resistance level, and I was saying, look for the double top pattern. And if you did see that, there was a really nice move that played out there. Now you can see here, we've kind of got a similar setup, although price has sort of retested that high there. We haven't had a strong rejection from this point at the moment. But if we were to, let's say, see price come down through and trade through this low here, we could say, okay, well, we've had the double top pattern. Price has traded through the neckline of that pattern, and there could be an opportunity to see price test the other side and come back down into the range lows here. Okay, does that make sense, guys? Now, someone did ask me earlier about the gold silver ratio. Now, the gold silver ratio is basically the price of gold versus the price of silver. Okay, now quite often there can be sort of a situation where gold has been heavily invested in and silver sort of lagging behind, and silver then becomes the sort of the commodity that is technically undervalued against silver. And the opposite can happen as well, where silver can be considered overvalued and gold can be considered undervalued, and that you then start to see investors start to push more into gold rather than silver. The only thing I think that kind of gold will trump silver over is the fact that gold is technically the safe haven asset. Investors rush to it in risk situations as well. So that's the other thing that it's got going for it. But I did bring up a chart of the gold silver ratio just so that I could kind of explain that in a little bit more visual detail as well. Okay, so I'm just going to zoom this chart in a little bit so you can see what's going on. So the red line is the price of gold. Okay, silver is the purple line. Okay, sorry, no, that's wrong. Silver is the red line. Okay, gold is the purple line. in here, and the black line in here is XAU. Okay, so that's gold. Let me just try and put that together. XAG, silver. Apologies for my poor handwriting. Okay, but you can see that the ratio is quite low at the moment, so it's around about minus 1.79%. Okay, now you can see here though, at one point the price of silver was very undervalued against the price of gold. Okay, so if it's undervalued against the price of gold, what would the ratio look like? Well, it would show us that it was positive. Okay, so that gold was the bullish. You've got to look at it as like, you know, gold versus the dollar, or silver versus the dollar, or like a dollar yen chart. Okay, the base currency is stronger. Okay, so that means that price has moved to the upside, and that's the same here. You can see that silver prices were down, gold prices were up. That caused this sort of peak to form here because the price of silver was undervalued against the price of gold. So investors could see more value in being a buyer of silver than for gold, for instance. And that's when you see this kind of aggressive movement out of silver. And then you can see at the moment, the two are very much in sort of line with each other at the moment. So that's the gold and silver ratio there. If you want to find out a little bit more about that, then there's loads of information about that online, but I can only talk about it so much in the short time that we have. Any questions, guys? If you are watching it on YouTube and you're not subscribed, please hit that subscribe button. It really helps the channel. We've got some really exciting stuff coming up. I've been interviewing some traders recently that we're going to get some pro trader talks on here. So that's all coming up. We're going to be doing some more live events as well. So if you do subscribe, you'll be notified when a live event is announced. So we're doing the non-farm payrolls tomorrow. So that's going to be something to look forward to. Remember as well, guys, you can win a chance to win an ounce of gold if you follow the details on the banner that's rolling across the stream at the bottom. It gives you all the details there as well. But does anybody have any questions? Feel free to fire any away. Let me know if you've learned something new today. That would be cool as well. The NFP webinar tomorrow is not going to be as timely as this one. I'll probably run it a little bit longer just so we can see what the outcome is. We're going to do a little bit before, a little bit after, so we can have a little bit of a discussion there as well. Thank you, Denise. Really appreciate that. Yeah, for those that are already subscribed and already liking the videos and things like that, I really appreciate all the comments, all the feedback. Yeah, really helps the channels, and yeah, lets me do more fun stuff like this. So I really do appreciate it. Learned a lot about COT reports and the history of gold. Yeah, I'll try and feature a bit more COT report details in the future. It's definitely something that I have a major interest in. So I do want to talk about that a little bit more on the channel. But especially good for people that are looking to sort of play the long-term game as well. Okay, if there's no more questions running through, I will probably leave it there. Oh, thank you, Denise. Really appreciate that. Thanks, Royston. Hope you're well. Okay then, guys. Well, You're welcome. You're welcome. There's going to be plenty more live streams. So if you don't feel like you want to ask a question today, and you go away and you think, oh, I wish I would have asked that question, then save it in your notes on your phone or something, or write it down and come and ask me on another live stream. Okay. So we're going to do another one tomorrow. Like I said, NFP is going to be the one. Hopefully you can all join me for that. If not, there'll be a recording of it after anyway, so that you can see that. And yeah, I'm going to leave it here then. Thank you for joining me for the Gold Market Mastery. There will be another Gold Market Mastery webinar on the 17th of May. So it's going to be again 9 a.m, 12 p.m, 7 p.m. on the 17th of May. Obviously, we'll put out some notifications for that as well, so you don't miss out on that. And yeah, it'll be interesting to see where the price of gold has gone since then, whether our sort of predictions have come through or not. And yeah, we'll see where the price of gold is around that time. No worries, Royston. Thanks, Cody. Thanks, Sifo. I hope I've said your name right there. Thank you for joining me. Right, guys, have a great rest of your evening, and I'll catch up with you tomorrow. Cheers.